Okay, but taste. Better or worse than the White Russian?
Better than a White Russian. That's not fair. I really like Kahlua.
As do I.
So, like,
I think it's a
so what
normal
I'll say
thing
is
to
this,
like.
better than a White Russian, less good than a Black Russian. which I guess I should say, not even a Black Russian, then a Kahlua and cream.
Oh,
mudslide? I don't know.
Wow.
Like,
I mean,
which is also a pain to clean. But if
Yeah.
I was to make a White Russian,
Anything
but
with-
just skip vodka and just do the Kahlua and then the cream, I'd be like, that's better.
I don't know. I love White Russians, but I'm also partial. I'm partial. Like, one, with White Russians, I need to be in the mood. And then two,
Okay, that's
like,
fair.
I just really, really like the dude. I really love the Big Lebowski. So,
And that's fair.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. All right, everybody, guess what? Welcome back to yet another episode, yet another presentation of Drunkenomics. This is the drinking podcast with an economics problem. So many economics problems, just so many. Right?
Yeah, there are more economics problems than there are days in the year to address them. It starts in the night sky.
Yeah, I mean,
That's
should we even start counting? I mean, I don't know. How much time do you got? How many bottles of scotch do you have? Actually, that's a better question.
Not enough. I'll say this. There is not enough scotch currently being aged to actually address all of it. And I'm including all of it. Like I'm saying, I mean, that's the single malts, the blends.
You're talking about the distilleries that have not even issued a single bottle yet, like the young ones, like that. Yeah,
all of it. Everything that is currently sitting in a warehouse, aging to perfection.
Yeah. And if you want, I feel like if you extended an olive branch, like if you included bourbon, rye, Irish whiskey, Japanese whiskey, Taiwanese whiskey, all the different types of whiskey.
I'm not saying there isn't enough whiskey.
I don't think there is.
Boy, it'd be.
That'd be a miracle.
It'd be hard.
Yeah, it'd be really hard.
It'd be very difficult.
Yeah, but speaking of whiskey, hopefully you have a nice, fresh, stiff one in front of you. I have my little single malt. I think it's a Speyside. I forget. I left the bottle in the kitchen, so I'm too lazy to go get it and figure out where it's from.
I just had I just had my blended one, so.
Oh, nice.
My nice Doers.
Do you know where Craig Galicki's from?
Craig Lakey?
Speyside, right? Yeah, Craig Lakey? Craig Lakey. I thought it was Craig Galicki.
That's what I say. One of us is wrong. We might both be wrong. I'm sure we have a Scottish listener out there more than happy to disabuse us.
Well, that's what I'm drinking right now. It's delicious. It's the 15-year. So I love it. I'm pretty sure it's a Speyside.
I think you're right. I don't think it
tastes like a Speyside is all I'm going to say. Could be a Highland.
Yeah.
Anyways, speaking of which, sorry for digressing so much. So glad you all can join us. This is, once again, the drinking podcast with an economics problem. By the power vested in the VIX, which is at 1981, which I'm sure was a great year. I think there was a Black Sabbath album that came out that year. But I guess that makes me the gracious host.
It does make you the more gracious host. But who? Yeah. Who are you for 2 weeks in a row more gracious?
And that makes me Aaron Wong. And that would make you, what was your name?
I am James Goldwater, LGH, less gracious host. Nice. I will be less gracious now than ever before. So, okay, I've looked up 1981's albums. Nice. And I found one that I think very clearly would be, if not necessarily the album you'd love, you'd be like, oh, that's a solid one. And of course, it's Tattoo You by Rolling Stones.
That is actually really good. Wait, isn't that the one with Miss You? Is Miss You on that album? I know Start Me Up is on that one.
That's a good question.
No, wait, no. God, I'm so stupid. No,
it is Start Me Up.
Oh, wait, no, I'm so stupid. Miss You is on Some Girls, isn't it?
Yes. It's the Some Girls.
Okay, yeah. Or Some Girls or For Some Girls, I forget, whatever. But either way, I mean, huge Stones fan. But yeah, dude, so glad you all can join us. Seriously, really appreciate you drinking along. We should probably start with one. Nothing we say. This is our little disclaimer that we have to say. Nothing we say represents the thoughts and views of our employers. If they do, that is completely coincidental. None of this is financial advice. We're pretty inebriated, so take everything we say.
Usually,
take everything.
Not when we're working, but
not when we're working, but like now, if you want to call this working, certainly. So take everything we say with a grain of salt. I mean, do your research. I really encourage you. If you hear a fact that we say and you're like, I don't know about that one, definitely look it up and feel free to correct us. You can find us on Instagram.
You can jump on
Twitter and Facebook. Oh wait, I misordered that. I said Twitter in the middle of Instagram and Facebook. What I meant to say is Instagram and Facebook at Drunkonomical, and then separately on Twitter at Drunkonomical. That's DRUNKUNOMICAL. From there, there is a
That's
link.
absolutely right, because we can't link those together, because obviously different social medias.
I know it's weird.
Elon.
Well, we'll see. We'll see if we get sued. But either way, from there you could. On most platforms, maybe except for Twitter, you can find us. You can find our Discord, which is free to all. Feel free to join. There's a lot of great conversations about White Russians, about the dude being proud or not proud,
about Fireball, about Fireball and milk,
about Fireball and milk. Yeah, and then of
the
course
Borsa or the Borsa's Nan. Who knows? I don't know. He still hasn't given us a name for it, so
yeah, I know. I don't know if you like my Paradox name, but I'm starting to not like it as much anymore. But yeah, but anyways, join the conversation. We'd love to hear from you guys.
Yeah, jump in.
Yeah, we'd love to hear your thoughts on certain things that we talk about. We'd love to, if there's something we say that you're just like, that is not correct, correct us. Like I welcome it. I appreciate it. I know that a lot of times I'm just kind of shooting from the hip here.
Yeah, we fire from the hip, and then the funny thing is when we're done firing from the hip, we actually are discussing things that we have thoroughly researched. So it's or have a lot of experience in, and we realize that, boy,
right.
Are we just as confident with our fire from the hip as we are with stuff we know? It's probably not the best.
Exactly.
It's probably not the best habit, but it's certainly the most econoholic or drinkonomist.
Yes, that's it. Absolutely. Yeah, just pretend like you know it all and then apologize later. I mean, that's kind of like one of our slogans, just like it's better to ask for forgiveness than for permission, right? So yeah, I mean, I don't know. Where do we go? I think the last thing we talked about was really the BRICS agreement. I guess if you want to kind of extend an knowledge branch, because like we've been talking about the petrodollar a lot, the BRICS agreement.
We have, but it's it's kind of a fun topic.
Yeah, it's kind of a fun topic. We're talking about the emerging markets of the world starting some sort of trade alliance, really kind of finding a rival to the petrodollar. And I just saw this recently. So the Petrogold is apparently something that Saudi Arabia is considering.
Yeah, and it's a very interesting, like, going to gold. I
don't know how you would do that. I don't know. You know what I mean?
Yeah, it's are you trying to create some very bizarre Bretton Woods agreement where instead of but I don't quite understand the linking of two commodities like that. Oh, gold and oil. That's how we'll do it. And I'm like, that's and a strategy, I guess.
Yeah, well, you know what else is also a strategy is just linking it to a currency, because if you think about it, like, what is gold? Gold is essentially kind of like a dollar, right? Dollars used to be tracked or I guess pinned to gold.
Pegged to gold.
Yeah, the buying power of a dollar fluctuates and the value of gold fluctuates. So we have two fluctuating things that are kind of supposed to be, but like it's kind of but it'd be the same if like gold, which is which has fluctuating value and has fluctuating entitlements to certain currencies, right? X amount of a pound of gold could entitle you to X amount of euros, but on a different day, a month from now, it could be another amount of euros.
Very different amount.
Yeah, same with the dollar, right?
It would benefit nations that have large amounts of gold or that have been stockpiling large amounts of gold,
which everybody is doing. Which everybody's doing, especially China. China has added a ton of gold into their reserves.
Absolutely, they love to stockpile commodities of all kinds, except coal for whatever reason. That one they went.
Yeah, they just said, "Screw you, Australia." But
we'll buy Australian coal from other countries. What?
What?
Hang on, wait a minute. That doesn't sound right.
I mean, maybe Australia can sell to like Indonesia, and then China can buy Australian coal from Indonesia or something like that. I don't know. I feel like that's a lot less efficient. But if that's you, do you?
Yeah, it's very much like it seems China wanted to cut in the middleman, which is bizarre. You don't often see.
How do you cut in a middleman? Like, how does that?
Frank Lucas would say, well, I'm going to go out there. I want to cut out the middleman. I want to go straight to it. You take me out to the jungle. I want to meet the guy.
Oh,
and then you meet the guy. If it's all the same to you, I don't want to have to drag myself out here ever again.
Yeah, exactly. Oh, what was that scene? He was like, you think you're just going to fly out of here with 10,000 tons of heroin? Oh, yeah. And no one's going to ask you any questions?
You think you're going to take this and someone is going to let you do that?
He's like,
the one actor.
That's right.
That's another great actor.
Yeah, I know. Denzel is awesome.
No, not Denzel. The Asian actor across from him in that scene.
Oh, really? I don't know who he is.
He's been in a bunch of stuff where he always plays that kind of second, like he's that supporting character. Not a huge part.
Delivers
it, nails it. Is when he acts, he is acting at the same level as Denzel or whoever's across.
That's great. Yeah,
and he's like,
that's crazy because like
man,
that dialogue scene, like, but you can tell both actors kind of had like this range that stayed within the context of the scene really, really well. But it also kind of made it interesting, and it made the dialogue have a little bit of tension, which is great.
It was. There was a lot of tension.
And then
And no one was threatening. They were just
it was, but there was tension. But tension's good, right? Tension's good in movies. You want like it keeps you reeled in. So
if they can make you feel something, they're doing it right.
Exactly. So I mean, that's my artistic tangent, right? That with all the Black Sabbath references and the Rolling Stones references. But yeah. So I don't know. I think it's weird because like gold, you want to do Petrogold, right? Gold fluctuates in value, in store value. You want to know what else fluctuates in value? Oil. Right, so you have two, so it'd be the same thing, right? So it's like, okay.
Well, it's this thing now. It's I have to balance my currency into a commodity into another commodity, and it's like that's
right.
Why?
But like,
why
then
would
again,
you do this?
Yeah, but then again, if you're Europe, right? So you're balancing your currency to another currency to oil. So it's kind of like the petrodollar benefits the U.S. right in the sense, well, and we do buy a lot of oil, so. Like it kind of makes sense to kind of placate to your best customer,
and we sell a lot of oil too. To be fair,
yes,
the U.S. is still a net energy exporter.
Absolutely net exporter. But yeah, so like it does behoove you, or it would be in your best interest to placate to your best customer. To the rest of the world, it's like, okay, well, we have the yuan or we have the yen or we have this. We have to match that over to the dollar, which fluctuates in value, and then match it over to oil, which also fluctuates in value. So, does gold make it easier? I don't know. I mean,
well, it's if you have to go into another thing to get this, it's like, why am I changing from the dollar to gold?
Yeah,
like which one begs to wonder. But at the same time, I guess if you only have to add one thing, right? Like, so it's, I'm having to go to gold, then to oil. It's like, well, all right. Like I was going to have to go into something else anyway, but it is still just, to me, it's just one of those things where like to the US, obviously that would be inconvenient. Suddenly we're adding a step and it's anywhere else in the world, you just change what you're acquiring.
Yeah. Well, it makes you wonder, like, I don't know, like what happened in the 70s where Saudi Arabia just really didn't have any appetite. Well, I'm just
Nixon.
Yeah, okay, yeah, obviously, yeah. I'm sure that absolutely had to have played a huge role. But like, what I'm also wondering too is like, okay, why did Saudi Arabia not have an appetite for the euro, or I guess not as big of an appetite to have a petro euro?
Well, I think so. So what it is, and it's very very simple. It's just that the oil exploitation rights were U.S. companies.
Fair enough.
Saudi Arabia.
Actually,
that's what it was. So
you know what? Actually, the more amount of seconds I sit on that, the more it makes sense. So
it's just I think I forget who it was, but I think it was British Petroleum or one of the other or Royal Dutch Shell, whatever it was. But they went through and they just decided based on their experience finding oil that Saudi Arabia did not have any oil. Now they don't have any.
Talk about a swing and a miss.
Yeah, it really went the other way on that one. And so then you end up with with like Exxon or someone like one of the U.S. firms getting the oil rights to Saudi Arabia very, very inexpensive because no one else was interested. No one else wanted the prospect. Whereas the U.S. firms went, yeah, all right.
I guess that makes things a little bit more interesting. I don't know. I just don't. How would you implement the Petrogold idea? I'm just like, to me, and obviously we're talking like decades into the future, probably before this even actually is pragmatic. But I just, I saw it on my newsfeed. I'm like, I can't not talk about this. This is pretty, just because it was so fitting into our previous conversations.
Oh, absolutely. So, yeah, it's well, the question becomes does Saudi Arabia really want gold, or do they just want gold because they can turn around and sell that for whatever currency they're needing that day?
Yeah, is it just what are the tenets of a dollar again? It's like one of them is like an exchange. It's that tenet, right? It's the exchange of value
of currency. It's there's the store of value.
A unit of exchange. That's unit of exchange. Okay.
It's a unit of exchange.
Yeah, okay. I swear to God, I didn't even look that up. It just popped up in my head. It was stored somewhere in my head that I wasn't accessing, and it just.
That's a real I was thinking about it. Store of value, my guy.
Nice. Thanks, man.
I will be. Thank you. Thank you for the pun. I'll be seeing myself out.
Wait. One more beer. But I just think it's really interesting. And like, we talked about the Petro yuan all this time. Speaking of the yuan, I mean, it seems like I keep seeing these headlines and I feel bad because last week I didn't really pay that much attention to the news. But today I looked at the news and it was all, all these Chinese munis might be going bankrupt. Not going bankrupt, but just running out of cash.
Yeah, which I guess shouldn't be a surprise, is that you've had 2 years of 2 years now of extreme of zero COVID policy, right?
Yeah.
So, which is now over, and during that time you had extreme economic downturn. You would shut down on a whim. You'd shut down at the drop of a hat. I mean, what was it? I was reading in I was reading The Economist that something like the municipalities create something like 50% of the tax revenue in China.
All
but they
of
also
China,
create
right?
85. They also create 85% of the total debt. And so
how does that work?
very, very quickly, one can sit here and say, like, if I'm making 50 cents and I'm spending 85, I've got a serious problem.
Right. Yeah.
Eventually. But how does that work? It's that they issue. You issue as the municipality. You have municipal bonds, which you're spending to build a high-speed rail network that no one uses, or you're using it to build. There's been a huge amount of investment in their high-speed rail system, but it's one that's being paid for with municipal bonds and with other essentially junk bonds. And on top of that, it's like, well, you're spending all this money to build this infrastructure. How are you going to get ROI? And more importantly, is the ROI going to create enough tax revenue to pay this municipal
bond back?
Or is this just going to, or you have to roll over this debt forever? And eventually people stop.
No.
It doesn't work. Eventually it fails. It has to.
Right. So that makes sense, right? So like,
kind of like their construction industry, their home industry, their home building industry, is that eventually people call dingo and get wise to it.
Yeah. Well, I mean, think about it this way. Like, so pretty much for every dollar that you spend in tax, like, or every dollar that you pay in taxes in China to your municipal, local government, your state and city tax, they're taking that and spending, $1.60 or 70 or whatever it is. The math is, I don't have a calculator on me.
Yeah, it's not a.
Yeah, and then where do they get the extra 60 cents? They're issuing new debt, right? They're saying, all right, here's a new bond. Yeah. This is the coupon payment, selling it to somebody, and hopefully they buy it, right? So that's essentially what's going on in China. And I don't know. Apparently, they're not doing that fast enough. Apparently, they're not saying, "Hey, here's a new bond. Someone please buy it. Anybody want it?"
Well, or either that, or nobody wants it. Which is the other end of that. Which is to say that, what you really look at is probably your local banks are looking at these like they're not good investments.
Yeah, but
eventually they'll be told you have to buy these, and the banks are going, "We don't have money."
Yeah. So I mean, I don't know if the yields for Chinese munis are like 15% or something. I have no idea, but. But it makes sense that nobody would want them because, one, like, it seems like they're insanely leveraged, and there's a concern that they might not be able to afford to pay government workers at the local level anymore.
No, and that creates a very serious problem. So the government can't pay its workers. Well, boy, does work stop real quick. Jimmy.
Yeah. Well, this is the thing too. I think it'd be
only really have to look at Russia in the 90s.
Well, I think it'd be pretty funny too because, like, if you think about it, like, I'm sorry to cut you off, but like, if you think about it, so like the people that are enforcing the CCP rule are the local police force. Mm-hmm. Obviously, I have a very skewed perspective towards the CCP. Granted, it's a very negative one. So, to be honest with you, if all of a sudden they can't pay their police force, the police force can't enforce CCP rule.
Or won't. Why would they? Like, why are they going to enforce a rule where they're not getting paid?
Exactly.
Like, it's a.
So, all I'm saying, what I'm trying to, how I'm trying to connect the dots is basically like, is it really that bad if they do run out of money, right? Because now local police force, I guess federal government could come in and enforce CCP rule, but then that would create other issues. Whereas maybe the federal government starts running out of cash too.
Well, the big one is always, and it's a really simple kind of description of what the difference between the military and the police is. Like in the U.S., you have the Posse Comitatus Act, which essentially says that federal military authority can't be used to enforce laws in the United States except in declared emergencies.
Right.
Except in very specific cases.
Yeah.
Critically, it becomes this: the purpose of the police is to enforce the law. The purpose of the military is to fight the enemies of the state and protect its citizens. And when you're using the military on the civilian population, the enemies of the state and the civilian population tend to become the same thing, which is a problem.
But I'm just saying, like, it's pretty fascinating, right? Like, it's, I think the rules are a little bit different in China in the sense that, like, if they wanted to, I'm sure China would be more than willing to do this. They'd be more than willing to impose their military force on their citizens. The U.S. is usually like, just think about. I feel like the U.S. is more like a domestic terrorist or a potential domestic terrorist or like a Bernie Madoff. Then they'll send in some.
Well, they'll send in the federal authorities, but if you the only time you see the U.S. military being deployed on some sort of active purpose within the United States, you're dealing with a natural disaster.
Yeah, it's a natural disaster.
So generally speaking, they're not taking weapons. I mean, they are, but they're not. It's not like they're not going with the stated purpose of crushing. Or let's put it this way: the U.S. Army hasn't been used within the United States in several hundred years.
Yeah.
in 100 during the 1860s was the last time it really happened. And I'll be honest with you, certain states brought that on themselves, is all I'm going to say.
Yes, exactly.
But no, in China, look, all I'll say is this. There is no history of the Chinese using their military on their people ever. They've never done it. Mm-hmm. They definitely didn't in Tiananmen Square.
Never.
Nothing happened.
Nothing happened.
Nothing happened. Nothing happened that day.
If you grew up in China,
don't even Google it. Don't even Google it.
You know, like they
don't look up.
Don't look up, dude. If you're in China, don't look up.
Yeah.
But it makes you wonder, right? Because like also, if I was in China, like I have no choice but to trust their, what I'm taught in school. Like you want to pass, you want to get to the university.
But I'll be honest with you, when your teachers stop getting paid,
there we go. See, that's where
teachers stop getting paid.
That's kind of
police stop getting paid.
That's kind of how I want the wheels to turn. You see what I mean? Like, so
does the party line stop getting towed?
Yeah, so that's what I'm saying. Like the CCP history. That doesn't get enforced, right? The history lessons of the CCP, they don't get enforced upon the Chinese citizens. Their rules, their all whatever it is, their inefficiencies. The fact that they don't have a vaccine, right? Like they could easily, and I'm sure the entire world would be willing to do this.
They could buy it, but they don't. They won't. They don't want to buy an external one. So
exactly. If they wanted, I guarantee you, Pfizer will sell them all the vaccines in the world.
Absolutely.
Whatever. Every pharmaceutical company in the U.S.
I'll sell you every vaccine you got dollars to buy.
Absolutely, yeah. They would sell them every single vaccine, but they don't want it, right?
They won't buy it. Yeah.
I'm just saying, like there's I think the CCP has just been absolutely out of control. I mean, just look at the real estate market. Like it's been unbelievably inefficient, right? What was that thing that you said?
Yeah.
About,
so here's the crazy fact, or the thing that I realized. I was reading something. I read The Economist. I'm not an uncultured swine. I do read things.
Well, I thought you totally were.
And then I jumped in and did some research. I could see where their data's coming from, but so. They did some math and they said, well, if you look at it, 60% of the houses purchased and paid for in the last decade. So I bought my house. 60% of those houses that have been historically purchased, so in the last 10 years, 60% have not been delivered.
That's 60, right? 60%.
60, not.
So almost 2 in 3 houses.
More than 50%. 3 out of 5 houses have not shown up.
Yeah.
Like, I've paid you. I paid the developer. I've been paying my mortgage because I have to.
Yeah.
But I don't have it. And that's not even to say like a completed version of it that I can live in. Like it's because we know that when they say like, oh, this is complete, what they really mean is the building is built. Like, because we were talking about how that, some of these are just concrete.
Yeah, they're just concrete. Like, well, first of all, the ironic thing about the whole 60%, of houses haven't even been delivered. Even with that, right? People have already paid for the cash has already been delivered to these real estate companies. They're still going broke.
Oh, so, yeah. No, it's bad. Like, I mean, Evergrande's, do you even need to say anymore? Like, Evergrande's not.
Yeah, what else do we need to say?
Not good.
Yeah, so
and Country Garden, which is like the number 2, is also in really bad shape.
Despite the fact that people have been paying for houses since 2013, they still are out of cash, which is absurd, right? Like, can you imagine?
And some of those buildings aren't finished.
Yeah, exactly. That's another thing that I was going to say too. Is like, I keep watching these like mini documentaries by Bloomberg or Wall Street Journal, and it's like, this old lady lives in the 20th floor of this apartment building that doesn't even have windows put up, right? And no plumbing, no electricity. It's some apartment that she paid.
She should be grateful there's stairs.
Yeah, she's like, oh, this is just the way life is. She walks downstairs to get water from like a courtyard that isn't finished. There's no plumbing, so whenever she has to, relieve herself, like a bucket
situation.
Yeah, whenever she has to relieve herself, she has to do it in a certain way, and then take that bucket and walk down 20 flights of stairs.
I'll be honest, and the worst part is, there's some spill, and that those stairs are slippery. Like, those are not good stairs.
No, exactly. And
to be honest,
like, so that's how a lot of people are living. They like build fires in their apartments because they're like, there's no electricity, there's no wiring, there's no Wi-Fi, there's no windows.
No, it's
literally like
that, and that's the thing. Is like when we say like undelivered, like that's a great comparison. Like,
so the 2 of the 5 that are delivered, a lot of them are like that.
Get delivered are like that. That's the 40% that did get delivered.
A lot of
when
them,
they say like, oh, here's your house, we've delivered. What they deliver usually, I mean, let's put it this way, they usually have windows. But that's just to keep the elements out. Other than that, like, it's an unfinished space. You're delivered like like a just a square footage area with a door on it. I don't even know if the door's on it. Like, it's just space.
Or if you can lock it, yeah, and it's it's concrete. There's no carpeting, there's no flooring.
It's concrete floor, concrete top. And so it's like, all right, so now you have to, if you were to make this habitable, you have to.
Does the kitchen work?
I don't know if to bring someone else in.
Is there a stove? Is there a microwave? Is there a fridge?
There's no internal walls. There's no
exactly.
Nothing.
That's what
there's
I'm saying.
No outlets. There's no
exactly. Nothing works, right? So there's it's not even connected to the grid. That's how like off these things. Like, it's just a building. It's just this giant 30-story building that's just there.
If there's ever anything that if you're in North Korea you shouldn't Google, not that it's connected to Google, let's be fair, but go ahead and look up like propaganda, like the North Korean propaganda village, and that's basically what a delivered apartment is. It's externally it's done, internally it's
it hasn't even I know what you're talking about. The one that looks like a really developed, thriving city from like 40 miles away.
Yeah, with lights on timers, and so like back in like the 50s and 60s when it was built, it was like this great propaganda thing. But now that you have like camera zoom lenses, everything else, people can like zoom it, or binoculars, they can just look at it and be like, oh, there are no windows. No one lives there. There are no cars there. Like, it's very clear that it is a Potemkin village, I think is the expression that gets used.
Well, it's really just like, North Korea, I think like is a lot like China and really just anyone else. They're definitely slaves to appearances. So the appearance of thriving and success, that's kind of what that thing is.
But think about this, like if these were the problems before Beijing put the red line on, or that line in the sand on their developers, saying essentially, hey, you can't keep doing this. You have to, we're not going to loan you more money. You need to do this. You can't be as levered up as you were. Like, that's how things were when they were allowed to do whatever they want. Now, like I think the cubic footage, or like the volume of like floor space being sold this year is down 24% from last year. So people aren't buying anymore.
I feel like, just based on the track record, that's like, as an investor, if you're an investor of anything, like you kind of have to pay attention to the track record of the company and the leadership, right? So if you look at the track record of China and their leadership, it's like, in the real estate market, it's kind of like, well, dude, you haven't delivered on 60% of the property. So 3 or 5 have not been delivered.
Have failed to materialize.
The 2 or 5 that have been delivered, most of them suck. So unless I'm a socialite,
would not be considered up to standards in the up to Western or American standards.
Yeah, or I think we could just agree that any humane standards. I mean, like, for the longest time, China was doing just fine, right? Like, they were doing okay. They weren't living like that in China.
If you give me cash for if you give me cash at the bar and ask for a pint, and I hand you an empty pint glass and go, there you go. That's not how this works, Mike. Like, it's not how this goes.
Yeah.
Like, that's very much
actually 2 of the 5 times you just handed them like a glass full of ice and nothing else. It's like
or 3 out of 5 you get a glass. You get a 2 out of 5 you get a glass full of ice. Maybe some filler, and the other 3 times I just put an empty glass on the bar and go, or let me first. I don't even put the glass on the bar. I just go like,
just not even a coaster. Just like
no, I'll do the coaster, not an animal.
Okay. You at least have a little bit more. You're a lot more ethical than China, so
but on top of that, like, think about this, like, so last month, Beijing's announced that 30 firms that they will not name, they've eliminated the triple red line policy on. So now 30 developers in China, they've said, have at it, go do.
What's the triple? So wait, remind me, and I'm sorry to make you do this, but what is the triple red line policy again?
The 3 red lines. So the 3 red lines. Were essentially, it was the way they were capping debts. They essentially said it was financial regulatory guidelines introduced by Beijing, and essentially they were capping debt to cash, debt to assets, and debt to equity ratios.
Oh, okay.
So like when you do these ratios,
are they kind of like restrictive covenants? Like, it sounds like covenants.
Well,
like
it was essentially saying if you fail any of these tests, you have to be passing all these tests before you can create new debt. Essentially. And so, it was essentially them saying, it was them creating a method of saying, like, you actually need to start delivering. You can't fuel your expansion with debt and then not actually, essentially, you can't Enron this. But then, like, so I said for 30 or so firms, they've recently said, actually, you guys can Enron this, because they've realized that there's some very serious problems with their developing market, especially when you consider the fact that 20% of Chinese GDP comes from property development, comes from that real estate.
Yeah, so like that makes me wonder. So like, one, there's company solvency issues that might be coming home to roost here pretty soon. And then on top of that, if you don't want your municipalities to be bankrupt, which if I was President Xi, I wouldn't, right?
No.
I'm not President Xi, and I'm grateful for it. But if I was President Xi, it's like, I want people to continue to enforce my CCP, whatever ideologies. If these municipalities go bankrupt, that's not good, but I feel like the likeliness of them going bankrupt, for all you quant methods nerds out there, like if the probability of these things happening will be increased by this much if the Chinese real estate market does this, right? Like, or does tanks
continues
or whatever,
to fail, right?
Yeah.
So if you start to see that there was less investment in it,
there's like we're seriously coming up with solvency issues, right?
Absolutely.
So
I know it was only at the very, very last minute before they entered real default, but it was only at the very, very last possible moment that Country Garden paid on one of its bonds, paid the coupon on one of its bonds. Like there are solvency issues. There's no question of like, when will solvency issues hit?
You kind of wonder, like, what do they do to get the cash to do that? Like,
Well, the next thing is, who are they going to get it from? Because obviously the municipalities don't have the money.
No.
Beijing probably isn't going to loan them. I mean, it will, but it'll do it through something. But
if they're banking on customer transactions, that's declining at a very, very fast pace, right? So
and if they're looking at any of the banks, remember these banks are also facing issues because people aren't paying their mortgage. Because I don't know if you heard about this, but 60% of homes purchased in the last decade haven't been delivered. So,
what's my incentive to pay for that? Yeah,
exactly. It reminds me of this old Russian joke. That I heard, and it's essentially
I love this. Yeah.
A guy goes down to he's in an old Soviet Russia, and he goes down to the to a car dealership, and he walks in and he talks to the dealer, and he goes, "How much for the car?" And he tells him this much, and he goes, "Okay," and he pays for it. He goes, "Okay, you pay now. It'll be here next year." And he goes, "Oh, can you have anything more specific?" He goes, "Oh, it'll be here March 13th." And he goes, "Oh, is it going to be here in the morning or the afternoon?" And then the dealer goes, "Does it matter?" And he goes, "Well, I've got the plumber coming in the morning." It's just one of those things where it's like, something's wrong.
So the plumber's been booked for a whole year too.
The immortal bard. Something's rotten in the state of Denmark, right? So there's something's not right.
Right. Yeah. So I mean, honestly, this is just kind of me selfishly. I think it'd be pretty fascinating. I'm not saying I would enjoy it because I think a lot of innocent people would get hurt. So I don't ever root for that. But I just think like it'd be fascinating to see the CCP kind of collapse on itself. Like, because I feel like President Xi, despite all of his faults, is very entrepreneurial in the sense that he's setting up all these trade agreements with Saudi Arabia, with BRICS, all that's his entrepreneurial spirit taking over.
But at the same time as he's living he's crushing all the rest of it.
Exactly. So and like the thing is, like, if you're President Xi, you're trying to live your best life, somebody's got to finance for it, right? Somebody's got to finance for your power.
Absolutely.
So, like, if the bottom falls out, if the real estate market collapses, and boom, there goes, a fifth of your GDP.
A fifth of my GDP.
Yeah. It's like, well, where can I turn to next, right? And like, real estate is something that everybody sees. Like, everybody notices. Like, everybody's going to see that, like, okay, the CCP is falling apart. Just take a look at the real estate market. Everybody can. It's you can't hide real estate.
No,
it's not like gold.
It's like that. Like that Potemkin village. It's
like
eventually people are going to realize there's no there. Like,
exactly.
If I own a gold mine, I was watching something and I forget what it was, but like if you have a giant paper factory, like, and you've got the money from Western investors who are buying your stock from you, and you just pay to have trucks come and go to convince people that it's real, like that all falls apart when a person pretending to be a tea salesman comes up to the security gate and goes, "Hey, I'm a tea salesman. I want your factory as one of my clients. I want to sell you tea for your break room. How many samples should I leave so that everyone could have a cup of tea?" And the security guard goes, "I don't know, 60 for a whole factory." And it's like that. Wait a minute. This factory should have hundreds of employees.
Yeah, but at some point, like you have to at least have the financing to pay for the truck's delivery for the appearance. Whereas China is running out of the money, they're running out of money for that. So that's what I mean. Is like at some point, I think it's going to be fascinating to see the CCP collapse on itself.
But remember, and that's
if it does, hopefully it does. I think I'm hoping
is what you have is that in China, essentially the rules are fraud stops at the border, fraud stops at the shore. Like, if you're defrauding a resident of Beijing, that's a crime. You can't do that. But if you're defrauding an American in California, dumb American shouldn't have given you the money. And so that is, if you've wondered why historically we've talked about like the U.S. delisting Chinese or delisting foreign companies and saying, well, you actually have to submit books that are audited to Sarbanes-Oxley standards, that are kept in compliance with GAAP, or these are essentially kept to American style standards. If you want to be listed on the U.S. exchanges, your accounting has to be up to American standards.
If you want to sell American bonds, if you want to, exactly.
If you want to sell it in U.S.,
issue bonds in American dollars, right? Like that's what I really
into U.S. markets through U.S. Stock exchanges, through a U.S. exchange, you have to do that, and you look at a lot of these firms, and it's like, can you create a massive fraud and do that? Of course, Enron did.
Yeah.
And Bernie Madoff did. And Bernie Madoff did it after Enron, when it was still, when they converted to Sarbanes-Oxley. He was able to keep that going. But so if you're a Chinese firm, it's easy to create that. But the problem is, eventually people get wise and they go, 60% of houses don't get delivered.
Yeah.
I wonder if this developer is one of those guys, if 60% of their projects aren't completed.
Yeah. So at some point, like they're going to run out of cash. Right, which it's I think we're coming closer and closer to that quote unquote some point where they do run out of cash. So I think it's pretty fascinating to see. Like I said, I'm here for it. Like if it does kind of fall on its head, I'm not going to feel bad for the CCP. I'll feel bad for the people of China that may or may not potentially get hurt from it. But
you feel bad for the people that
suffer. I've been feeling bad for the people of China that have been living in these cement boxes on the 30th floor with no elevator.
Yeah, my 30th floor walk up.
Yeah, and the only way they can get water up there is if they go down to the well in the courtyard that really isn't a courtyard, but it's a courtyard with a pump, and then you pump buckets of water, and you put it on a barbell, and you walk it up 30 flights of stairs. That's how you get water up there.
Yeah, I seem to recall them doing things like that in Mulan, the cartoon.
Yeah, exactly. It's exactly like that.
You'd hope that in theory that
you don't know if it's clean, so you have to build a fire. Yeah, so you have to build a fire in your apartment, boil the water up so it's purified to some extent. And then that's the water you drink. And then over here you have the water that you wash yourself with, right? And you don't have proper plumbing.
Which you then use.
Yeah, so you sometimes
because boy, you don't want to mix up your clean water, your water buckets with your waste bucket.
That would not be a good day. Yeah, and I've heard, I've seen like a lot of people that they don't shower. They shower in the courtyard. Why? No, unfortunately, that sucks. A lot of times they have to clean themselves in the courtyard because it's like, well, we don't have plumbing. I don't have plumbing on the 30th floor. I don't want to get my neighbors.
Yeah.
I don't want like some sort of leakage to my neighbors. So that's like I said, I felt bad for them, right? How much more can they handle? And I don't disagree with them not wanting to buy houses. As a matter of fact, I think they should save their money and do other things with it. But that's kind of a fascinating thing. Speaking of being super leveraged, there's a country that's a little bit closer than China that's very super leveraged too.
I will say flat out, this country, if it's the one I think you're thinking about, is over leveraged. It's not super leveraged; they are over leveraged.
I think I think over leveraged
exceeds GDP at this point.
It's one of those countries. I will say this though about this particular country is that they do at least have some redeeming qualities in the fact that they produce some excellent whiskey and excellent beer. And, it is the home to some excellent universities, particularly one that's about right in the middle of it.
Really right in the middle, I would say. You might say there's some fond memorials there.
Yeah.
Right, are we talking about the same country?
Yeah, I think we're talking about the same country. And it's that's right. It's the United States of America. How could I forget?
Absolutely. Of course. Yeah, how could we let last week not mention that, of course, we hit the debt ceiling a week early?
Yeah, so this is the thing. Remember, so I'll admit I was wrong in the fact that I predicted a month ago that we would hit, this was more like 2 months ago. I predicted, and I don't know if it was caught on mic or not, but I predicted that we were going to hit the debt ceiling.
Oh, yeah, you
in
said
December.
That.
In December,
well, yeah.
I said it was going to be before year end, and okay, so I was wrong. My bad. All right, I was off.
Well, they got because what happened is they got together and they decided to kick the can down the road a little bit.
Genius move. Yes.
Look, let's put it this way. I know a few NFL teams who are looking for kickers. Let's see what these Congress people are doing because they've got practice.
they've got a lot of practice. Dude, okay, hold on. I don't know if you're talking about the Dallas Cowboys, but Brett Maher is my dude. So I'm just saying that's my dude. I know I feel bad for God. I feel so bad because
it's not his fault they lost that game.
It is not. It is not his fault. But
he didn't.
The fact that he was 29 for 32 all season, by the way, and also 9 for 11, 50 plus all season. So he's a great kicker. I don't care what anybody says. Brett Maher is my dude. Okay, so just a little backstory, and I know we're going way off the rails here. Brett Maher kicked at the University of Nebraska. So that university that I was talking about, right in the middle of the country, that's
at Memorial Stadium.
Yeah, Brett Maher was a kicker and he punted at Nebraska. Not a lot of people remember that. He was the punter before Stan.
That's right, he did.
He was the punter before
Fultz.
Before my boy Fultz. Yeah, and I was pretty close with both those guys. Brett Maher in the summer, he worked at the golf course for the University of Nebraska. So like the course that we would play at, he worked there. So I got range balls from. He would be like, hey, yeah, the tee box is clear. Go ahead whenever you're ready. So Brett Maher is my boy, man. I felt really bad. I had no idea he was going to make it. Like, he was working at the golf course when he was like in between seasons of him kicking in Canada.
Yeah, but I mean, like, you got to do what you got to do. He was before NIL money. You were before NIL money.
Yeah.
Think about how much money you could have pulled down with that NIL.
Me, no.
We're the Wong brothers, and we like this golf course.
I don't know about.
I don't know about that. Yeah, no, but I'm just saying they have practice kicking cans down the road and not dealing with things. They can teach college freshmen procrastinating on a paper some stuff about not dealing with it yet. No, but they at least decided to fund the government through September and essentially go, well, I want to get paid, so let's get paid. And so they took care of that, but they didn't do anything about the debt ceiling, even in the lame duck session, which was kind of stressful.
So what's going to happen? Like, I mean,
well, here's the thing. Like,
I'm not going to wage money on us defaulting in loans, on the U.S. defaulting in loans, because I don't think that's going to happen.
I don't think that's going to happen either. But here's the thing. Like, so last week on Wednesday night or late Wednesday, we officially hit the debt ceiling, and Janet Yellen began what are called extraordinary measures, right? So extraordinary measures is where the Treasury Department starts paying off credit cards with credit cards to essentially. It moves things around. It robs Peter to pay Paul, right? It doesn't.
I mean, it's a very sophisticated thing. It's a very sophisticated process called debt rollovers, right? Where you
between debt rollovers and then where they decide, okay, we're not going to pay. So everything that's current, so every single Treasury bond that's held by the U.S. government, by a federal agency, we're not going to pay the coupons on those. We'll create the liability to pay it, and we'll pay it once the debt ceiling's been raised. But for now, we're gonna hold that cash. We're gonna use it for different things.
If you don't pay a coupon, that's like a form of default. That's almost the same thing.
It is.
And just so you know, like in case anybody's wondering, as far as credit history of the United States,
it's one of 5 countries that's never defaulted.
Yes, it's never defaulted. And also, I should extend an olive branch here as well. For the longest time, U.S. government has always been considered risk-free. Standard & Poor's, Fitch, and Moody's, which are the 3 main rating agencies. There are more out there, but those are the 3 main ones. I hate that they're the only ones. But either way, I digress. They're the main ones. They rate U.S. government bonds generally as AAA as the highest rating, the highest investment grade rating for bonds. AAA rated bonds have never defaulted. So Standard & Poor's, Fitch, and Moody's, if you have a AAA rating from any of those companies, odds are you have never defaulted on your loans. Granted,
I guess when I said 5, there are 10. And it's Canada, Denmark, Belgium, Finland, Malaysia, Mauritius.
Have never defaulted?
New Zealand, Norway, Singapore, the United States, and Australia.
Oh, wow.
Now,
well, hold on. I got to clean up what I said real quick. I got to tag along something at the end because, I said AAA rated bonds have never defaulted. Granted, AAA bonds have been downgraded and then defaulted. So I don't want to say all AAA bonds have never defaulted. If you buy a AAA bond and it gets defaulted on, I'm just saying it can get downgraded. But anyways, what were you saying?
Well, no, there's essentially 10, 11 countries that have never defaulted that are that are larger, and it boils down to it's Canada, the United States, Denmark, the UK, Australia, New Zealand, right? So these are countries that have never their debt has been considered good,
right?
That they've always made good on their debt in their existences. The problems become is, U.S. debt, however, has been downgraded once for a little while, and it was in 2011. It was the last time the Republicans decided that they wanted to do something about the debt ceiling.
They were flirting with it. They were flirting the idea with it. Like, remember in 2021 when there was we reached that first, we reached the debt ceiling thing, the debacle for the first time, or since I guess we started the podcast. But if we talked about it, there was a debt ceiling debacle that happened in late 2021, mid to late 2021. And the ratings agencies were almost going to downgrade.
Yeah, and I think they woke up at that point. They said, okay, now we actually have to do something. And so they kicked it down the road. It's in an omnibus. Actually, what they really did is they passed a spending package which raised the debt ceiling instantly by the amount of proposed spending.
Yeah, I think that's going to happen.
All that spending hadn't been done yet.
I honestly think that's going to happen.
I'm not sure if that's what's going to happen this time. So here's what'll happen. Here's what I think will happen.
Okay.
So we have a Republican House, a Democratic Senate, and a Democratic White House. I think Mitch McConnell. So I don't care for Mitch McConnell. I don't know if I've made that clear over the last few years.
Yeah.
But I don't care for the guy. But I think he's looked at Kevin McCarthy and what the Republicans in the House are doing, and he's gone, these people are crazy. And he's also looking here going, I'm the minority leader, but I will not be held hostage by 5 crazy people in the House. I won't do it. So I think we'll get some version of a debt ceiling raise that is passed to the Senate, that's palatable. Like, it won't be great, but it'll be palatable.
Well, but this is the problem.
And then the question will be what happens in the House. And then the real question will come is because no matter what McCarthy does, he's damned if he does, he's damned if he doesn't.
Absolutely.
If he goes to raise the debt ceiling, he's going to lose. He can't afford to lose five votes, because if he loses 5 votes and it's not palatable enough to the Democrats, he's going to lose. It won't pass.
Yeah.
So I think what will happen is you'll end up with some version of the Senate bill. We'll get to the House, and it will take some Republicans crossing the aisle. You'll end up with some mid block of Democrats and Republicans having to vote it through. Now the problem is, I don't know if they get that done before the extraordinary measures run out.
Yeah. Well,
that's my concern.
So this is the thing is so if those extraordinary measures do run out, I think it's going to be a huge test of, okay, what does the federal government actually prioritize? Because if you default on your loans, then you can still afford to pay the pension plans and the workers, government workers, all that kind of stuff. But so essentially you can decide from either, not defaulting and not paying pension plans and workers, or you can decide on defaulting but still being able to pay your pension plans and your government workers.
So what happens there is you generally see something like and we've seen this with Evergrande specifically. Evergrande did this too, where they said, okay, we'll pay all domestically held debt. We will not pay international debt.
Yeah,
and so you might see the United States do something like that, where if it were to come to it, you might see the government say, okay, well, every pension fund that holds treasuries, every U.S.-based bank, every U.S.-based business, every U.S.-based holder of bonds, they will be paid.
Yeah.
But overseas holders, we will enter default. So we'll enter default on treasuries held by the Bank of England, treasuries held by the by the People's Republic of China.
Yeah.
There's that big argument that if the U.S. wants to pay the debt, what it can do is it can just print script and pay, but that devalues your currency, right? So, and then there's arguments that, well, you can't actually do that with currency, with printed currency for blank reasons. And then there's those weird, there's the weird sovereign citizen arguments that are like, well, coinage isn't currency for that respect. So we can mint a coin that pays the debt. And do that, and I'm
Janet Yellen debunked that today, right? She was like, "Okay, no, we're not minting this coin." Yeah,
she did, and it's because every time around every time there's been a Democrat in the Treasury Department, and that question or that crazy statement comes out, the Democrat Secretary of the Treasury goes, "No, that's not a feasible solution. That's not a viable solution. That's just not real."
Right. So
whereas Steve Mnuchin was like, "I don't know, we could." And I'm like, Steve, no,
don't do
it.
Well, and that's the thing is technically, could we print more money and issue more debt to not default? Yes, absolutely. One, issuing more debt is not a good idea because we've, I don't know if that's considered within our budget anymore. And also, too, if we do issue more debt, it's at a higher interest rate. So that's one of the things we talked about. Debt rollovers. If we there's a lot of debt coming due this year in the U.S. It's like $6 trillion or something like that of dollars of debt that's coming due in the U.S. We're probably going to roll that over. AKA, what I mean by that is raise another $6 trillion in debt at a higher interest rate now because we've raised interest rates like crazy for the last year. So that's something, I'm not trying to be superstitious about anything.
On the other hand, a lot of the current debt holders would be more than happy to do that. I've got a 5-year bond that's paying off at 2% interest, and then the next one is, the next one's going to come out, I'm going to get 4% on my coupon.
A little bit more attractive. Yeah, of course.
And essentially at that point, just being like, well, you don't have to give me a $1,000. You don't have to give me my cash. what's the face value of this? Not the face value of the bond, but they'll look at the bond and go like, okay, give me. As I say, look at the par value, and they'll say, give me the essentially what is the price of this bond if you went to the auction, and they'd say, hey, if the bond that's currently expiring is worth $1,000 and the bond you're about to issue, I would buy at a at $150 discount. I would say, just give me that bond at $150.
Right. Straight
rollover, essentially a plowback.
Yeah.
The real problem comes is that the second that U.S. bonds are no longer risk-free, some point in June or July.
Yeah, let's hope that doesn't happen. Think about how much,
which we absolutely don't want to happen. But think about this: like, if you think like that'll be bad in the U.S., it would be. But think about everywhere else. Everyone else who is in a worse economic position, but who's been holding these bonds, like assuming that they were risk-free. Essentially, you've got every overseas bank. So if suddenly the entire world looks around and goes, wait, it's the strongest currency of the world right now is the dollar, and they aren't paying their debt.
And the most reliable
isn't paying their debt. That crisis of confidence, right? Because 2008 wasn't, the markets were trending down. That was it. They were just slowly trending down. Right. Panic didn't happen until there was a crisis in leadership, a crisis in confidence with the government's ability to deal with the problem. You get to June or July, and that crisis happens again. It will make, I would say it would make 2008 look like a picnic. Like it would be ugly in June or July.
Yeah.
Let's put this way. I think football season would be in doubt.
Oh my God. Yeah. I hope not. That'd make me really sad. I mean, I think, one of the things like that might happen is because like, I know the extraordinary measures, like they obviously don't want to tap into that too often.
No.
Right. So something needs to be done.
It needs to stop being an every time kind of thing.
Yeah. Like every 2 years. Okay. No, I don't want to play this game every 2 years. Nobody wants to. Right. So we need to get spending under control. And do we need to increase tax receipts? I don't know. I don't know if that's the answer. I don't know if that's a tax burden is necessarily something that the economy wants to take on right now. But I'm sure like in some pockets of the economy that can, really alleviate the issue. But I think the big thing is the government, and when I say the government, I mean like the federal government, Congress, I think they're really going to urge the central bank. So Jerome Powell, who has been a celebrity for the last 4 years, I think they're really going to urge him to lower rates maybe in the middle of the year at some point, which I don't want him to do, but I think they might urge him to do that because they're going to be like, okay, look, we need to raise new debt. We need to roll over a lot of debt that's coming due, that's maturing this year. We don't want to do it at this extremely expensive rate. So hurry up and lower the rates so that we can roll over the debt, issue debt to make sure we don't default. And then, whatever playbook that you had before, you can start calling plays from that.
All right. So I think you are probably right that there will be conversations where they'll say you've got to do something because we can't sustain this. And to be fair, I think Powell will sit there and go, I can't do that just because you've got a problem. He goes, you guys have to deal with your problems. I'm here. I've got an inflation problem.
I hope he does that.
Guys, this debt ceiling issue, it is an issue, but it's your issue. Inflation's mine. This is yours. Stay in your lane. Stay in your lane. I hope he does
that. Not because I want the U.S. government to default. That would be awful.
Because he needs to deal with inflation. Their problem.
Because there's multiple reasons. One, I've just like the accountability principle, right? Like I think we need that. Mm-hmm. So him doing that would kind of enforce that accountability principle. Two, accountability for him as well. He said he was going to tackle inflation last year. He didn't really do a good job of it. And I think he knows that. So
he tried. He did. His poor attempt at a tackle. Let's put it that way. It was a bad tackle. It was a missed tackle. Yeah, but he's upset.
Yeah, it was Mike McCarthy calling a Hail Mary at the end of the game with Zeke snacking Ezekiel Elliott snapping the ball. That's what it was.
Now, new quarter, new game, whatever it is. Yeah. He's back out there. He's not going to miss. He's not going to fall for that same one again. He's going to go after this one aggressively.
But like we remember what happened in the 70s, right? So like in the 70s, there was kind of this kind of issue, right? Debt rollovers, debt ceilings, all that kind of stuff. And then Congress kind of pressured the Federal Reserve to lower rates because of debt rollovers, of default risk, and all that kind of stuff.
And they did.
They pivoted. They pivoted off of this contraction era policy that they had, which is kind of what we're looking at right now. They pivoted, and guess what happened? Paul Volcker was like, all right, you know what? I'm going balls to the wall here.
Well, inflation got out of control.
Yeah, so
Volcker went,
that
well,
provoked Volcker. Yeah, exactly. So I guess I skipped a step. Yeah,
and that's how we got the what they call the Volcker recession, or Volcker's interest rates, where you have interest rates at 18, up in the double digits.
Yeah,
he had to bring the hammer down.
Yeah, double digit hikes. So that's what I'm saying. Like, if we pivot too soon, I think that would be, in the long run, potentially worse. Like, and I think, I kind of mentioned this, in our off mic conversations. I think the Fed really needs to see small and medium businesses, like, once they cut jobs, because we've seen Google cut jobs.
Yeah.
We've seen,
so Google's cutting 6% of it, or Alphabet's cutting 6% of their workforce. Microsoft about 4.5%.
Yeah, but like the banks are starting to cut. Everybody's
Goldman, every major tech firm except for Apple, is cutting. And I was looking at that, and I was trying to figure out why. Why is Apple the odd man out? Now, initially, I know I said Microsoft won't do it either because Microsoft has a lot of infrastructure.
Yeah.
But then I realized what it was, and it's because Apple's the only one of these firms that didn't expand their workforce in the last 2 years or 3 years.
Oh, okay.
That didn't really expand their workforce. Like Microsoft and Google, they've put on. I think Microsoft hired 50,000 people.
Yeah,
it's not substantial.
I think it's fascinating too, because I do think, like, you go to all these small businesses and you still see all these help wanted signs everywhere. Whereas, you're seeing a different story when you go into the S&P large caps, right?
Yeah, they're all starting to cut.
Yeah, the narrative is way different. So I think it's pretty fascinating. Like, I think that's ultimately what it comes down to is like, okay, if small businesses start cutting, then all of a sudden the Fed can start thinking about a pivot. But I think you don't just pivot on a dime. You let your policies sit in place for a while
and have the effect you want them to.
Exactly.
Or confirm maybe that the plateauing or decrease in the rate of inflation is because of your policy, and it's not just a fluke.
Exactly. So you want the goals that you had set out for yourself to be actually achieved.
And I think you're absolutely right on that. Now here, and I've never been a huge I've been a huge fan of the cheat sheet or even the open book, generally speaking.
Yeah.
At the same time, I know that makes the exam, generally speaking, harder. But I will give Congress this really amazing hint. It's a really simple cheat that if they want to use it, they should. And it's really simple. The debt ceiling is arbitrary.
Whoa!
It's not in the Constitution.
What?
It's just
a concept.
It is a law that Congress passed in the 19 teens around the First World War.
What a concept, dude! You blew my mind.
Congress.
Oh my God!
Really quick, I'm just going to tell you, if you want to stop having this fight, and I strongly encourage you to stop having this fight, just get rid of the debt ceiling. You don't need it. No one else in the world has one. Like it's clearly not doing any good. Like, I would understand having it if you guys were passing like balanced budget, not even balanced budgets. If you were, balanced would be ideal. But if you guys were passing budgets regularly each Congress instead of omnibus spending packages, willy-nilly, if you will.
And that makes sense because I feel like most of Europe, like if you look at the debt to GDP for most of Europe, it's it's on its head, right? Like it's 1 point something, right? I'm not saying it's good, but I'm just saying, like, I do believe in creditworthiness of the U.S. I don't know if I want to. I don't know if I want to lift the debt ceiling forever, but it's like what I think. All I really want is like, okay, so if you have $800 billion that you're planning on spending on military and defense, only spend that much, right? And be efficient with it.
No cost plus.
Don't just be like, okay, this project cost $90 million. Okay, here's $90 million. Oh, this one cost $270 and we only planned $260 million.
And you're late and over budget. Well, congratulations. Your shareholders get to eat the fact that you're over budget now. You need to bid more accurately. Now, if I come in and I change the contract, that's a different thing. But if you go, hey, this fighter plane I'm developing is actually going to be more expensive than we originally thought, my response is, you bid what you bid. Yeah. You deliver what you're contractually obligated to deliver. We will pay you what we're contractually obligated to pay you. You say we're going to give you $100 billion.
At the time that you specify that you were going to deliver it.
Absolutely.
Right? It's a big
one.
You
need to be on time, on budget. And if you're over budget, your firm and its shareholders by extension need to come up with that. That's on them. I'm sorry your profitability is going down.
Yeah.
You should have given us a more accurate bid. We would have paid you more money if you'd given us a more accurate bid.
Yeah,
but it's not our fault.
Differently. Yeah.
You can't be a hog at the trough. The government isn't a trough for military and defense spending for you to just pig out. I mean, there's that great phrase, pigs get fat, hogs get slaughtered. And when you all act like hogs, boy, am I down to slaughter.
Yeah, exactly. And I think to your point, it's really just it's a big accountability thing, right? Like you say, like for all sides, right? Like you say you're gonna accept this much for this service, deliver on it. U.S. government, you say you're going to spend this much, only spend that much. That's
absolutely.
It. Right.
And then, because if you did that consistently, I'd be like, you know what? They are budgeting. They're keeping to their budget. I don't worry about the debt ceiling existing. But at the same time, you don't need the debt ceiling if you're doing that. But you also don't need the debt ceiling at all. But really, like, I mean, and to speak to you kind of one of those things that you were hinting at earlier, if you want something that's delivered on, that is awesome. You should check out drunkonomics.myspreadshop.com.
Yeah,
because it delivers.
There's a lot of great things. It delivers really good-looking hoodies,
absolutely,
black hoodies,
and in other colors too, like light black and dark.
Yeah, exactly, like light black, and we also have light black and dark black, and even darker black polos, golf polos. So if you want to go shoot under par somewhere
with that fireball in hand, milk or no milk, your call.
I'm not trying to 3-putt, dude. I don't want to do fireball.
Well, see, so
in one of those polos.
I'm gonna be honest. I don't golf. I putt. I've never actually gone golfing. I've never actually driven a ball. I'd either be really good at it or absolutely awful.
If you putt with fireball,
but I will tell all of you, if I'm out golfing, I'm drinking a fireball, and every time I'm swinging the club and hitting it, I'm going, Aaron, and I'm swinging. Yeah, basketball players sit there and say Kobe. And you go for that swing because that's just drunkonomical right there. That's just
totally. Say my name. Oh gosh,
that's what you got to do.
That just sounds terrible, but whatever. I mean, if you
don't want people on the course knowing that you're drinking Fireball or anything else, we also have some really sweet
mugs,
travel cups, to go cups, metal mugs, right? So you can keep that sweating to a minimum. You can, you can be classy.
Yeah, and additionally, if you want to leave a tip in the tip jar, all that would be very much appreciated. Seriously. You can do that at Patreon, patreon.com/drunkonomics, DRUNKONOMICS. Leave a tip in the tip jar. Help us.
Help us keep our bar cart stocked, our produce intact.
Absolutely.
Our ice frozen, our fridge is cold, our whiskey stones freezing, and
just keep us in good spirits.
Keep us going there.
Literally.
And we absolutely, and that is one of our favorite things is obviously the support we get from you guys. Yeah. Also, if you don't want to do any of that, and look, I strongly encourage you to, we'd really appreciate just writing us a review wherever you listen to your podcast. Just give us a review. Tell us what you think. I mean, I prefer if it's 5 stars, we are Drunkonomics. If it's like 2 stars, this is Morning Brew.
If it's 1 star, then it's Barstool Finance.
Absolutely. No, because I'm a simple man with a simple plan. Whenever I'm dealing with people on the bar and they're like, I'm a Yelp. I'm a platinum level Yelper. Gosh. And I'm like, and I immediately just in my mind go, you're awful.
You're just
person.
a not good human being.
You are. It's just like, you're unbearable. But that's why, generally speaking, if you've ever had me as a bartender, you've probably heard a joke at some point when they're like, I'm going to write a review. And I'm like, well, if you enjoyed your time, my name's James. And if you didn't, my name's Steven. And,
exactly.
It's just
but seriously, all feedback is seriously greatly appreciated. The fact that you guys are listening, the fact that you guys are drinking with us,
huge.
I really enjoy it all. With that said, I encourage you to please continue to play chestnut checkers. Don't brag, just say always fill and kill. What else am I missing?
Do everything in your power to I don't know, it's just really simple. Well, it's not really simple. It's actually really hard to do, but everyone out there, I know you guys make it look easy when you stay drunkonomical all week.
Absolutely. Right? Cheers, my friend.
Cheers.